go through is we're going to go through some slides, and we're just going to look at this a little bit. I call it the good, the bad, and the ugly. You know, I mean, we're up against things that we've never seen before in the marketplace. Everything's moving so fast. There's rotations every day of the week. We've never ever seen anything like this. And, you know, I think I even said that back in the beginning of COVID, that we had never seen anything like this. And the pit bull says the same thing, you know. So, you know, I don't know if it's years of experience or if it's just being around the market so much or just being kind of shocked at what we're seeing. I mean, the 2007, 2008 credit crisis was a total shock, I think, to most people. I mean, I think financially it really hurt a lot of people, but this is a little different. This is, you know, during the 2007, 2008 credit crisis, there wasn't 20 million, 21 million people unemployed. Now, I know that number is way down now, but we've rallied quite far. And how much further do we got to go? So anyways, what I'm going to do is Marlon will continue to let people in, but what I'm going to do is I'm going to turn off the camera so I can kind of look at my notes a little bit, kind of talk a little bit. I will be back though. And then I also want to say at the end of this, and I'm going to try to do the slides kind of quick. You know, I mean, if we did know how to do this correctly, I think that we could have a panel like Rob in there and Paul and other people on their cameras. And as we move the slides forward, you guys could ask questions, and I'd be really open to that. But like Marlon said, we've never done that before. And at the end of this, what we'll do is after the slides, and I know that there's going to be questions, and it's going to be hard. It's always hard to answer questions when you're doing this. So for just the easiest part, smoothest part of this would be to just kind of jungle through my my slides, talk a little bit about that, and then we'll open this up at the end of it where I'll talk a little bit more in a wider perspective about some of the things that maybe I use a little bit to trade. I know that I've told people on Twitter that I want to say that I've gotten over a hurdle in my own trading, and but I don't want to say, hey, I don't want to go outside of just saying that I'm learning to be more patient, and being more patient it's been really good. You know, I mean, I don't go in every day trying to think that I'm supposed to make a trade on the open, which I love trading the opens. But I'm being more patient, and it's been paying off. And, you know, one of the things I think about trading is you don't have to be a big trader to make money trading. You know, it doesn't matter if you're a 1 lot, a 2 lot, a 10 lot, a 20 lot, a 50 lot, whatever your number is, you know, whatever you're comfortable with, whatever you can afford. Some people trade very big and they shouldn't be trading big, and they have a lot of money. And I know one person in particular that does that. And I think it's stupid. Just because you have the money doesn't mean that you should be pushing that money around in the markets. And for the other guys that have smaller accounts that can manage these daily swings and make money, you know, I think that really it's a very rare thing, you know. And I really, the way I judge what a good trader is, a good trader is someone that can trade for a living and pay their bills. And if you can pay your bills off of trading, you're doing very good. So anyways, Marlon, I'm going to turn off the video, and then Marlon, you're going to take care of that other thing, and I'm going to be talking about the slide. So we'll commence and we'll move forward. And like I said, after this, we'll kind of open it up and we'll talk a little bit about all sorts of stuff, whatever comes to our mind.
Sure. That sounds good. Danny, can you hear me?
Yeah.
So I think one of the issues is that everybody has to set up Zoom.
Oh, okay. Okay, I
so
got you.
We're getting a little bit of late participation here. So.
Yeah, I got you. Okay. All right. That makes sense. You'd have to be on Zoom to get Zoom. So that's right. All right. So listen, I'm going to kick into gear, Marlon. I'm going to turn off the camera, and we're going to start with MrTopStep year-end and 2021 outlook. 2021. We've really gone a long way, haven't we? All right. Well, listen, I want to thank everybody for coming in. you know, we live in some very trying times. And I know that from my own experience, being around, you guys can hear me, right? Okay, great. Everybody can hear me, right? Okay. Um, like I said, we really do live in some trying times, you know, and I'm really try to be an optimistic heart. You know, I do have, I'm like anybody. I get a little nervous. I get a little crazy. I mean, I think a lot of people are kind of in that craze thing right now. They've been down for, you know, 8, 9 months, and we're going into another big thing with the pandemic. And, you know, you got the stock market up, and, you know, what's going to give here? You know, I mean, I think that I was talking to the pit bull today and late after the close, and the market sold off. And one of the things that I try to talk to him about is that there is no more momentum trading. You can make a momentum trade during the day if you catch it right, but trying to sell a weak close or buy a strong close just doesn't work. And that's a lot of what the Pitbull did in his career. He found levels where there were areas that he could come in, and you know, the market looked bad. IBM was down, the bellwether of the S&P, and he'd get short the S&P, and it was just like that. It was that easy. But we all know now that that's not as easy as it used to be. In fact, maybe it was really never easy, and maybe it was something that we thought was, but we could really, really never be truthful with ourselves, because this is really something that's hard. It's not easy. It's not for everyone. Everybody has different tolerances, financial thresholds that they've got to, you know, adhere to. You know, you've got only so much money in your account. You go, oh, how are you going to make that money back? Well, that's one of the big things about trading now. In the old days, I used to, I could lose, you know, 4, 5, 6, 8, 9 grand, 10 grand at, you know, 9:30, 10 o'clock in the morning. And if I stuck with it, by 1 o'clock or 2 o'clock in the afternoon, I could have most of that money back. You could trade around your losses, I guess, is what I would say. But now these losses, when you start, you know, when you start to make one bad trade, 2 bad trade, 3 bad trades, you know, you start to lose your focus, and then you start counting your dollars. And as soon as you start counting your dollars, then you know you're really in trouble. So my own thing, and again, after we get off, we're done with the slides, we'll open it up and we'll talk a little bit about just pure trading. Okay. So we're going to move on to the first slide. And I think that this is a slide that really brings us back in time. You know, we had come off a very good, strong year at the end of the year in 2019. I mean, it was an incredible year, and everything was moving along going into in the beginning of the first quarter. And then COVID hit. And on Jan 10th, China reported its first death of the COVID virus. I remember I remember everybody was worrying about the China tariffs back then. And that really wasn't the big focal point of what was going on. I mean, in the end, the China tariffs had very little to do with anything when it comes to the bottom line of COVID. On the last trading day of March, March 31, the S&P finished down 42 handles, or 1.6%, posting a 20% loss for the quarter. Now that wasn't the low, but that was just from the first couple of weeks in March to the end of March. It was its biggest quarterly decline since 2008. The Dow Jones that day fell 410 points, down almost 2%, and the NASDAQ dropped 1%, or almost 1%, and finished down 14% on the quarter. It was an abrupt, I mean, a very, very abrupt end to the longest bull market in U.S. history. I mean, and that was, and I got to be honest with you guys. I generally, because I'm always kind of bulled up. I'm always looking for an opportunity on the long side. When the market sold off that quick and that hard, I thought the S&P could keep going. And when we started to reverse higher, I knew, I mean, within a couple of days of the low, that, well, I'll tell you when I really knew. When I really knew that the low was in was when crude oil went negative, but that's another story for another day. But I don't think, other than, when we had the 2007 credit crisis, I remember the pit bull saying something to me that was really, that has stayed with me from the whole time. He said one day the markets were acting really bad in the S&P, and I was on the floor, and he said, he goes, I did my charts last night, and the S&P was weak, and it had been weak all week, and he said, you know what? There's rotten wood floating around in the brokerage, the stock market leaders. And at the time, it was the brokerage stocks and the banks. He said that there was rotten wood floating around in the market leaders. And I remember him telling me about that. And I really, it sticks in my mind to this day, because from that day on, I kept thinking to myself, there's something wrong here. And long before anything came out about subprime, the pit bull was talking about something rotten in Denmark. But that gradually came in. Bear Stearns had to go down, Lehman had to go down. That was a big, long, drawn out process. It took several years, and Bank of America folded into Merrill Lynch, big mess. I mean, but this came, it just came fast, and it came hard. And what I kind of think is it happened is it just, the market found itself to, I believe that down 30% became like your new down 20% in a bear market. 30% is where it really, really came down. 30% is where it really came in, where these institutions were stepping up. Some of these big ETF funds were buying. Everybody started coming in. So maybe there was just value in a lot of those stocks that were down 30, 40%. So, that was really, for as far as I'm concerned, that's really what I saw in the beginning of that. There was just massive liquidation. So when we move on to the next, what I'm trying to do is I'm trying to kind of bring you guys into something that I've kind of formulated, and all these slides are all going to lead into something. In the beginning, they may seem a little bit distant, but at the end, I'll pull it all together. So on our next slide, there was, how did they save the market? How, and when the markets sell off, everybody talks about the plunge protection team, the PPT, and people question whether or not there's actually a PPT, the plunge protection team. Personally, I believe that there is. And that's when the government comes in and they buy stocks, they buy bonds, they buy everything that's undervalued at the time, and they use Federal Reserve money, whether it be through the Federal Reserve or just straight through the government. But they're throwing money at the market. And like in 2007, yep, it's a matter of fact. That's exactly right. It's very much like what the CARES Act was it was like it was like QE on steroids. I mean, they just tried to put as much money as they could into the market at the time, and obviously it was to help people in small business and everything across the board. But at the end of that, what they did is they stopped the decline with that, and then after the market started short covering, I don't think really. I talked to a lot of people. I don't know anybody that thought that the S&P would go down so far and then rally so much. I don't know anybody that came back and said, "Hey, Danny, when the S&P was at 2,200 or 2,300, hey, Danny, I think the S&P is going up to 36." No, I didn't ever hear anybody tell me that. But that said, like I said, that down 30% threshold off a high in the S&P is a big thing. And I think total loss from high to low, year high to low, those losses were higher. But anyways, that's where $2.3 trillion went. And I know that there was a lot of question about how these funds were allocated and whether they were allocated correctly. I don't think anybody will ever know that answer. Okay, on to slide 4. I don't know. I was asking in the room today. You know, the VIX during on March 16th, the VIX traded up to 82.69, and now it's trading in the low 20s. I don't know. And volume has dropped off. If you notice how much volume has dropped off, the average ranges in the S&Ps have gone like from 50, 53 handles a day or 54 handles a day down to like 30, down to 25, even less over the last. I think today's trading range in the S&P for most of the day was only 8 handles and only 50 points in the NASDAQ. Minimal interest in buying it at this price. Yeah, I agree. Yeah, I agree. You know, here, if you guys want to throw things in, you feel free, because the way that the chat works, I can look at the chart and I can see your comments. So don't be afraid to ask a question or post something. I'll do my best to kind of hit it. But here's the thing where I have a real hard time thinking that with the VIX in the low 20s or 21, 22, that we're going to be going down to VIX 10 or VIX 12. I think that the whole complex of trading right now has changed, and it's going to take a long time to get it back into a kind of a more steady, slower, kind of a higher volume pace. Right now, I mean, I'm not here to talk about algorithmic trading or high frequency trading, but during those hot days when the S&P was moving 100 handles a day, there's very, very little customer volume and all that. You know, yeah, sure, there's hedge funds and there's hedging and there's, you know, but your average guy, like you or me, we don't go flying into the S&P or the NASDAQ futures is what I like to trade. We don't go flying into these contracts when, you know, you're generally using a 3, 4, 5, 6, 8 handle stop, and you see a level where you want to buy it, you buy it, and immediately you're out 3 handles. You know, two, 3 ticks. A handle is 1 tick. All of a sudden, you buy 3 or 4 lots, and all of a sudden there are 4 handles against you. There's 6 handles against you. There are 8 handles against you. And you could have been right with that level at a different time of the day, but you bought them and all of a sudden they dropped 30 handles. So as far as risk reward goes, I personally like this kind of stuff. And I think if you pace yourself and you become patient and you're trading against the algos, at some point you'll be able to catch a flyer. I like buying the falling knives. So, you know, I've done well lately. But at the end of the day, I'm not sure what this VIX drop is telling us. It's telling us that it's more of a risk-off trade, I think, than a risk-on trade. But maybe you guys would disagree with that. I don't know. But, you know, from 80, basically 83 down to, I think it got down to 1960 something. That's a big drop. So, you know, I'm not really quite sure. I think what it's doing is it's telling you that everything's okay, but is it okay? I don't know that. You know, the S&P has been overlooking COVID during the most recent pandemic, and nobody seems to care. The numbers are going up. So we're going to move on to slide 5. And, you know, this is just the S&P is up since March. You know, these are just simple charts. They were provided by AMS Trading. They're the charts that I use, and there'll be an execution platform with this soon. You know, as you can see, you know, we got down to, you know, in the S&P, the high was 1709. What was this? The high was, I don't know what these numbers are. I'm a little confused. Well, I know we're down. I knew that we were down almost 40% from the highs. You know, 44%. That's what this chart shows. And then we've rallied. You know, we've rallied sharply. So the COVID lows, highs 100 up. We're from the COVID lows, we're up 101 0.43%. So we've had this mammoth rally, and I know that the markets look like they want to go higher, and I think they do go higher, but I'm really concerned that the amount of time and is the number, how much time it's taken to get up here, how much buying power we've used to get up here, and how much is left of this. A lot of people think that we're going to continue to go higher right into the end of the year. I think we are, but I think it's always going to be from, if you want to be long, you got to be in here buying the dips. You can't be trying to, and the other part about this that I find very funny, and I've got a little saying that goes with this, is what I see is a lot of people sell it because they're not long. And my cousin Bobby and I talk about this, and we chuckle, is that, you're not long, so what do? You sell it. If you're not long and you're a trend follower, just stay out and wait for the dips. I mean, the patterns are pretty much the same every day. The S&P opens higher, it pulls back a little bit in the morning, you can cover your short, you wait to buy the decline, you hold that into the middle of the day, and then you come back late in the close, and then the guys with the better seats take over. So we're going to move on to slide 2. Let me see. This is slide, I'm sorry. Oh, no. Yeah. Hold on 1 minute. The tutors. Okay. Well, this slide shouldn't be here. We'll come back to this slide. We're going to go to 7. Now the NASDAQ is, got down to 97. It was 97.25 at the high on 220 and 6,625 low on 323 and down 32%. At the highs, we're up 40. We've rallied 44.32%. And off the COVID lows, it's up. The NASDAQ is up 91.08%. These are huge rallies when you look at the time frame. I mean, I can't remember 100% rallies in 3 months. I mean, in 8 months. I don't know. I mean, does anybody else remember rallies where the S&Ps rallied 100% in 8 months? No, I don't think so. I don't think so. And then we're going to go to the Dow Jones chart on number 8. And, the Dow made its high at, 2,091.59 and on 220, and made its low at 17,833 on 323, down almost 40% from the high. But I think really that we had already come off, and I don't think that in March, I don't think that we were already coming off our highs when the market started to sell off. But anyways, yes, the year to date, the NASDAQ's up 37. Is it really? No. The Dow Jones is up 7.32%, and we're up 69, almost 70% off the COVID lows. I'm sorry about that, you guys. I was working on these slides and trying to get them all organized, and sometimes it's just kind of hard to get straightened out. And then we're going to go to the Russell, which has been an amazing trade. And again, one of the big things that's really, really changed about all this is the amount of rotation that's going on. I mean, some of you guys are, stock traders. Some of you guys are equity option traders. Some of you guys are futures traders. But, I don't believe in my lifetime have I seen more daily rotation. Now, I think this started toward the end of last year, but since COVID and the decline, you've seen this really, really big restructuring of what's, the market leaders, stay-at-home stocks, Amazon, FANG, all the. So COVID, I think there was somewhat of a restructuring, and that restructuring was out of the big caps and into the Russell 2000. And year to date, the Russell's now, I think the Russell was down, it was down 36% at its low, but now at its high, it's up 72%, and it's up almost 16% on the year. But a lot of this rally, has come in the last 3 months, 4 months, and it doesn't seem to be letting up at all. I mean, and I think that, I've got a friend that's got a small hedge fund, and he manages small cap stocks. And he said the demand for small cap stocks is so big. And I talk to him about it all the time. He said that he's never seen anything like it. And he thinks that we could be in a situation in small cap stocks where they remain elevated for quite a while. Anyways, we're going to move on to number 10. So what I'm trying to do here, I'm trying to show you how things started out after COVID. Things were very, very, very negative in March, at the beginning of April. And that was when the VIX was elevated. And we've got all these great returns on the S&P, the NASDAQ, the Russell, the Dow Jones. And then you've got the president elections and the after effects of the stock market. Now, one of the things that, oh, wow. Okay. Here, hold on. This is the Republican versus Democrats. Although conventional wisdom may suggest that a Republican win the presidential election should be more supportive to business, hence the stock market, this has not always been the case. Since 1999, a Democratic win has been slightly better for the stock market with an annualized return of 9%, compared with an average of 6% annual during Republican presidencies. Therefore, the party that wins does not seem to have a tangible effect on the stock market. Well, here's the thing. I agree with the way this works, but I'll tell you what. One of the things that I think is going to happen here, and if you look at the chart in year one, I believe that we're going to have a strong rally in the beginning of the year. But then I think that as we go into the end of March, we're going to start to see some pullbacks. I think as the new president takes over the helm, they start to initiate some of his agenda, that the markets are going to start to get soft. They're going to be all pumped up with all this money that stimulus has been put into the market. The market's going to be lofty. Yes, I do agree that the markets in the longer look are probably going a lot higher, but I just don't think that they're going to go straight up. I think that there's going to be big peaks and valleys in here, especially this year. And we're going to move, and I'll tell you why. We're going into it. Number 11. We had weakening job numbers, and it spurred the government to get together and negotiate a aid package. I don't know. I mean, I myself am somewhat disappointed with the fact that the government, at a time of need, couldn't get this stuff done. But it's great news for the markets. It really is. But it's a far cry from the 2.2 billion that was being asked for. Now they say that Pelosi and Mitch McConnell have agreed during a conversation to try to put the legislation together to keep the government going before December 11th. That's only in 4 days. So I don't know, but I think that the markets are still living off the idea that this is coming. And I think more now than ever before that there'll probably be something before the end of the year. And then once Biden takes office, they're going to start, they're talking crazy numbers that the Democrats want to spend. I think they're talking between 4 and 6 trillion. I'm not quite sure. And again, that's not a political statement. It's just a lot of money is going to be, a lot of stimulus is going to be put to work in these markets. And therefore, they may be a little bit hard to sell, at least initially. And then slide number 12. Now, this is where I think things start to change a little bit. I don't know. Is he off his rocker? Is he, I don't think he is. I think he's just a very, very smart. Shutdown government would be an improvement. Yeah, probably would be. Is Musk Is Musk off his rocker? I don't know. I don't think so. I think what he is he's way ahead of his time. And I knew I had a friend that actually shorted Tesla, and I don't know why he shorted Tesla, but when Tesla started roaring up to, from 600 to 800 to 1200, he was caught short in the middle of that. And I kept telling him I thought the Tesla was going to go to 1800. I even put it out on Twitter before. What is that? He's broke. I even put it out on Twitter that I thought it was going to go to 1800, and it kept going. It went to 2100, 2200. I don't even remember. But is he off his rocker? I don't know. I don't think so. I think he's an awfully smart guy that is a visionary, and he's going to be out there. I mean, I don't think he's going anywhere. And I do think one thing that in the next slide, we'll kind of go over this, slide number 13, kind of what we can expect from all this. Now, hold on 1 minute. This is, I was talking to Trader Dave about this today in the room, in the forum, MrTopStep forum. And, one of the things about my background, it may be a little different than a lot of other people's background, is I did a lot of big business on the floor in the S&P. I mean, I really did. It was not, this isn't something that just I made up one day. I was down there and I got a lot of business. And the reason I got a lot of business is because I fought for people that were getting screwed going into the open outcry markets. I was down there fighting for them, and no one did that. But I know for a fact, whenever they do these big S&P rebalances and they do these switches where they take a stock out and they put a big stock in and they take a stock out, that it causes huge amounts of volatility. But you don't, let's see, let me look at my notes. Let me read it. It says, the S&P said Tesla will be added to the broader stock market gauge before the start of trading on December 31st, meaning most index tracking funds that follow the S&P 500 will engage in a flurry of trading on the Friday before. That is a very key. No matter what you guys are doing, you pay attention to what's going on Friday. And in fact, some of these ETFs and some of these mutual funds and these index tracking funds, they're going to start to adjust positions before. And in fact, the Pitbull told me tonight that, or today after the close, that one of his friends that's very big in stocks said that when they start selling Amazon's going to be one of the big stocks that they reduce as they put in Tesla. That his friend said that basically when they're dumping Amazon, that it's possible that if you buy Tesla during this period and you catch it right, it could be the absolute low of the year for Amazon. So, Trader Dave's an incredibly smart guy, and I ran a $250 million hedge fund at Morgan Stanley, and a very, very good trader. And I put it in the forum today. He said, well, it's probably kind of already worked in a little bit, but all I know is when you put $65 billion worth of stocks, in one session, you move $65 billion worth of stocks changing hands in one session. You are creating unbelievable amounts of volatility and volume. This is going to be one of the most epic days of the year, outside of, the sell-off in March. I'm talking about just single days. One, you be looking at, one of the things that you really want to do is you want to look at the broader market S&P's volume during that time. And it's going to be gigantic. I mean, there'll be huge volume on the open, there'll be huge volume on the close, and there'll be nothing but two-way huge trade going on Friday and on Monday once they get the stock in. Tesla's market value has ballooned to $538 billion, making it the sixth largest company in the U.S. stock market, and it would have, and it would have more than 1% weighting in the S&P. That puts it ahead of Berkshire Hathaway, behind Facebook, by more than 100 billion. You know, I mean, in the coming weeks, the passive fund managers and some actively traded, hold on. I'm sorry, I'm moving around my cursor. Actively traded mutual funds, all benchmark the S&P, will adjust their portfolios to make room for it. Traders and fund managers say putting Tesla in, that they're going to put Tesla in, you know, there was a debate that it was so big that a lot of the big firms like Goldman Sachs and JP Morgan, all these big firms, they said take 2 days to put Tesla in. And the S&P decided to do it in 1 day. So this is going to be an absolutely momentous period for the S&P and Tesla. I think it's just going to be. Okay, so one of the things that I've learned about this is that big events are known for making tops. So Tesla's stock has gone up and up and up over the last, since it's been announced that they're going to go in the S&P. What are they up, 45%? Is that what it is? Tesla's up 40-something percent. I mean, there's people have been front running this move into Tesla for weeks. So my own opinion is that this could be some type of sell the news event, but we're going to have to get there to see it. Now we're going to move to slide 14. This is my other negative. These are states that have restrictions on COVID. It's going crazy, you guys. I mean, to me, it's not a big surprise. I live in Florida. But that said, Florida, you know, there was 30-something thousand cases of COVID in Florida and in California today, and there was 11,000 in Florida. But I think California is 3 times larger than Florida, right? So there go the numbers. But this is getting more, it's getting bigger. And Chicago, when I was in, yeah, that's pretty funny. That's pretty good, TL. It's going to get bigger and bigger, I think. You know, they're talking about herd immunity, but I got to ask, if there were only 20,000, 30,000 cases of this in March or April, and the stock market was selling off like that, and now there's here, let me look at my notes. You know, now there's almost 4.1 million cases in the United States. How is it that the stock market isn't reacting to any of this? Where is the disconnect here? You know, I mean, I don't think it can be like that. And I also think that another part of the new administration's agenda is going to be a little bit tougher on this. You know, mandatory masks and all sorts of other stuff. I don't think, you know, I'm not here again. I'm nothing to do with politics here. I swear to God. But if this ends up that there's more shutdowns of major cities, and you know, New York's talking about closing, Cuomo's talking about closing the outdoor restaurants. When I was in Chicago, they closed. While I was in Chicago, they closed all the restaurants. I mean, you know, you've got areas of like downtown Chicago in the Viagra Triangle where, you know, there's a couple of really great restaurants, Gibson's, Tavern on Rush, you know, all these great restaurants out there. And you've got all these tables out in front, and there's hundreds of people enjoying themselves outside. But how's that going to work? You know, I mean, it's going to get cold. I mean, it was cold when I was there. It was 35 degrees, 40 degrees. They had heaters out on the sidewalks and stuff at Gibson's. But how are you going to keep this stuff open in the winter? Well, I mean, I don't know. I think they 4.1 million tested positive in the United States. Excuse me. That's my fault. But they closed grocery stores. Oh, well, now you wonder a little bit why things are going on in Florida the way they are. I mean, I know Florida's not everybody's cup of tea, but real estate prices have absolutely exploded down here. I mean, off the rocker. I don't even want to rent a 3-bedroom house in Delray Beach. I don't even want to tell you. I mean, you want to rent a home with a pool in Boca, Delray, or anywhere else, you know, you're gonna spend so much money your head's gonna spin. But that's a drop in the bucket to these people that are coming down here. You know, some of these people have been long stock. I mean, they've got all sorts of extra money, but this COVID map is not going to improve over the next couple months. I don't think that we've gotten anywhere near a peak in cases yet. And as you restrict more businesses, as you restrict people from going out, there's going to be more, it's just going to add more stress, more problems for the economy. It's not going away. And I know that they've got the vaccines coming out. I think that a guy like me, if you don't have a lot of money, you don't have a concierge doctor, and you're under 50, you know, you're under 60 years old, and you're just some regular schmo, maybe even if you have a little pre-existing of this or that, it's not going to matter. We're not going to get that vaccine until the end of next summer, and maybe even into the fall. They don't even have the supply line set up yet. So, you know, you got to get your first responders, you got to get the people in the old homes, you know, and then the stuff will start to branch out. But if you got a concierge doctor, you may be able to get this stuff. I mean, the pit bull may be able to get this stuff. He pays, you know, a little bit extra, you know, pays a lot extra for it, and he gets a shot. But for your normal guy, like me and you, or me and us, we may not see that for a while. Yes, I do. Absolutely, Tom. I'm not going to hesitate 1 minute to get that. I think that, you know, one of the things I think that the Republicans did do right was they put into motion a lot of that pharmaceutical stuff that allowed these companies to really dig in, and I'm happy about that. I think that this is a sneak preview of what could be maybe in a year. You know, I mean, I know people don't want to hear this. They don't want to think about going into the winter and then coming out in the spring and, you know, still being not able to go to the beach in Chicago or go to and I think they said, one of my friends said that there's 11,000 restaurants and bars in Chicago, and like maybe 8 to 10% are still open. How are you gonna fix that? You're not gonna fix that. That's not gonna. This is gonna be a long, drawn out process and it's not gonna. Maybe the stock market just resists. It just resists it because there is such a thing as just money pouring in, and it doesn't even care about what's going on. It's just money needs to be put to work, so it's put into the stock market regardless of what's going on. And clearly, the stock market's overlooking COVID. So we're going to move on to slide 15. Hold on. You know, I hate to pound this COVID stuff. You know, but what does it all mean? I mean, is it really? Is the stock market beyond all this? I don't know. I mean, I'd like to hear what you guys think. My question to you is the stock market beyond COVID? Does it even care anymore? I don't know what to say. I think at some point it will again. And again, that presidential chart, one of the slides didn't get, a couple of slides I put in right, but the presidential chart, it doesn't matter until it does. That's right. The one presidential chart that I was trying to pull actually showed that the market would rally in the first quarter. It's off in March, and then you get a you guys here? The market is not expecting. Yeah. Okay, cool. Because it just said connection lost. And I thought, oh my God.
Yeah, you were going in and out there for a minute.
Okay. But you know, what if these estimates of COVID really are 8 times higher? You know, one of the, I never believed this from the beginning when the government was saying that, you know, the Chinese came out and, you know, they reported their first case of COVID. And I had actually heard about it. Marlon knows about this. We have a company in China, MrTopStep China, and Kun Wang, the guy that runs our company there, he said that 90% of the cases are false. Yeah, well, I mean, you know, you may be right, Thomas. You know, on my slide with you know, on my slide with the Tesla slide, you know, Musk actually went he went and got 4 COVID tests in one day, and each one of them had a different reading. So you could be very right about that. But you know, regardless of that, I don't think that there's any doubt about what's going on in the hospitals in the United States. I know that the death rate has gone down dramatically. I mean, like 0.01% now, right? I mean, isn't it like something like that? But that let's not just because the death rate is low doesn't mean that it's not going to have an effect on the economy. Now, only question you need to ask based on the outcomes: do you want it, and do you want? Well, do you want it? And well, that's a good question. I've already had it, and I mean, according to the tests that I took, I had the antibodies. Now, I don't know. I had 2 tests. One's supposed to be 94% accurate, and then the new 15-minute test, or the one that the most recent one is supposed to be like 99% accurate. So who do you believe? I don't know who you believe. Yes, a PRC test. Yep. Or PCR test, excuse me. I got it at Quest. But you know, my own opinion is that there are probably millions of us that have already had it. We didn't even know it. I mean, I talk to people all the time that say that in, you know, December, January, February, you know, they had this 2-week flu that, you know, they were sicker than dogs. And then I hear people say that they had it, and those are the ones that are fake. The government, yeah, I thought, was it 13,000 for positive, or is it 31,000? I don't know. I mean, it's a very confusing thing, and all I hope for is that we can get beyond this, because I do think when we do get beyond this, that things are really going to really take off. I really do. And again, maybe that's just me. 13 to 39. If they kill you with it, oh yeah. Because I really do think there's going to be a sustained growth in the United States. I mean, you're not going to be able to stop the no herd immunity, according to Sweden. Oh yeah, I did read that, Gordon. But I can't let this. You know, I'm one of those people that I can't stay in the house any longer. I don't know about you guys, you know, but I live in Florida. So the difference between Florida and a lot of other places is that, you know, you want to go out on your bike, you want to go to the beach, you want to go downtown. You know, yesterday my neighbor had a band in the street in his garage. You know, people are out drinking, they're outside, they're doing their thing. You know, do I go in restaurants and eat inside restaurants? No, I don't. I think it's too risky. And even if I did have the antibodies, how long do they last? I mean, you hear a different story on all this stuff. Some people, the antibodies only last 4 to 6 weeks. Some people say they last 3 months. Some people, they last 6 months. I don't know. You know, I mean, and somebody asked me, you know, I did have a situation back in like April where I went to bed one night and I woke up in the middle of the night. It was fine when I went to sleep. I had night sweats, I had a sore throat, a cough, and a fever, all at once. I mean, and for 2 days I had that, and then it was gone, like nothing. And my doctor said, "Oh no, you didn't have it." How do you know I didn't have it? I was on, you know, I don't know. Down in Florida, you could get it anywhere. So, anyways, we're going to move on to slide 16. Try to kind of tie this all in. We're kind of pulling up on a. So, you know, like I said, but when we began this, it was really going to be more about the good, the bad, and the ugly. And this is another JP Morgan slide. I've actually got all this stuff if anybody wants any of the links to it. That we're creating record levels of U.S. debt. And I got to ask you guys, really, we saw how quantitative easing worked. We're seeing how stimulus works. But how long do you think this can really go on? I mean, is it, are we just, now we're stuck like Japan, you know, where we're just so in debt that the economy is stuck with zero rates forever. And, you know, the stock market goes up and nobody gives a shit about all the money all the debt that's piling up. I can't believe that at some point this is not going to come to roost. I just can't. It just, and again, I'm not an economist. I look at this stuff and I tell myself, look, if the market's going up, I always say this is one of my key little things, you know, if the market's going up, you know, I don't want to fight City Hall. I want to go for the ride. If the market's going down, I don't want to fight City Hall. I want to go for the ride. Yeah, they did. That wasn't very. But anyways, this debt, that's what's happening. The question is, where do we get the money? Exactly, Celeb. I have no idea, and I ask myself that all the time. How in the world will they? Well, then you're going to really get it. You guys are going to love this next slide. Slide 17. You know, I don't know. And so, I guess the United States has got company in its global debt because no, they haven't, but they're gonna be taxed. But I mean, how do we get to this? I mean, the United States is going to be what? I mean, I don't even know what the estimate for how many $1 trillion the U.S. government's going to owe. I know there's some really big numbers out there. You know, I mean, 62, 80 trillion. I don't know what it is. I don't know. But at what stage does this play out? You know, I mean, you're gonna have so much debt, and you're gonna have this overvalued stock market. I think when you look at the two, at some point they're gonna collide. You know, I don't know why they haven't collided with COVID. That really, that you're exactly right, Thomas. You're exactly right. Head on. Yep. Well, head on is going to be a very, very difficult task. So, you know, I'm just kind of putting it out there, you know, and I'm going to get to where I'm going with this. I've got a couple more slides now. So slide number 18. Here's the presidential. Here's the one that I was looking at. A new vaccine is going to be good, but job creation is slowing and debt is piling up at a record pace. While I'm a bull market guy, I'm cautiously optimistic bull. My view is the S&P goes higher as the new administration adds more COVID stimulus, but I don't think it goes straight up. And if you look at this chart, you look at the Democratic first year, look at the difference. It does end up going up quite a bit. You know, you look at, but we get that decline in March. And that's why I'm thinking that we kind of cruise through the end of the year. We cruise into January and February, and then start come March. And, you know, again, this robots will do the work for us. 18% of US companies are saying, oh yeah, you got that right, Sid. And then maybe some kind of drop going into the fourth quarter. Slide 19. No, slide 19 is the best 6 months for stocks. You know, you may not have it. All right, well then here. Okay, so we'll do the Tudor slide. Okay, so well, we all know what the best 6 months for stocks are. It's, you know, from November to April. And I've got a slide up, but you know, that's okay.
We'll put it up. You want to just do
okay? No, don't worry about it. Don't worry about it. But this is a really, really, really big story on Tudor, and the reason I'm putting Tudor up is because he's kind of a, you know, he made a lot of money in '87. We all remember he was all over the '87 crash. I mean, that's how he made his claim to fame. But these hedge funds overall over the last 15, 20 years, they've really not outperform the S&P. I don't know what the you know, what the averages are, but very few, you know, very few hedge funds outpace the S&P. I mean, you would think all you'd have to do is if you were a hedge fund and you wanted to keep up with the stock market, you just buy the S&P and you buy tech stocks, right? I mean, well, that's the way it looks now. But if you look at these hedge fund results, some of the best hedge funds in the world make 2, 3, 4, 5%, 8%. And, you know, but Tudor's been out there, and he recently, I think in the last couple of years, he moved to West Palm Beach. His headquarters are now in the JP Morgan Bank headquarters in West Palm Beach. And today, actually, there was a story out that Goldman Sachs is going to move one of its desk trading operations to somewhere in Florida. But anyways, what this does is he's going out. Marlon, is there a way to put this link in the chat so people can look at it?
I did. I posted it in there.
Okay, cool. But anyways, he's looking forward, and I agree with this. I think, like I said, I think in a year out from here, we're going to be going big. I mean, I think things are. Thomas, I couldn't agree more. I think property prices in Florida, and here's the thing. Let me explain why I think that where we're at right now, you know, in these big cities, these, you know, Los Angeles, California, Chicago, New York, all these big cities, right? This is a really, really simple thing. You're living in New York, or you're living in Chicago, or you're living in LA. You're 25, you're 30 years old, whatever. You may be 35, you may be 40. Why do you live there? You live there for the nightlife. You live there for the restaurants. You live there for the shows. You live there for you live there for whatever, you know, I mean, the lakefront, you know, the nightlife, the nightclubs, everything. That's what attracts people to these big cities. The ease of getting in, getting out, being in a beautiful apartment overlooking, you know, the park, and, you know, great stuff. Well, I got to ask you, you're 25 years old, you're living in Chicago, and you're making 150 grand a year, and you're living in a $6,000 a month apartment. you're living La Vida Loca. Or you're in New York, you're paying 10, 12 grand a month, and these are big cities with big stuff to do at night. You can go out all over anywhere you want. And now your mayor is telling you that you have to stay in. You can't go out, and all the restaurants are closed. And the only thing that you should be going out for is to go to the doctor or go to the grocery store. And then, and then you're there, because it's winter and you can't get out, you can't get out of your lease, and you're thinking, okay, well, 3-4 months of this, farmland will go up. Exactly. It probably already has. And, so you're 6 months, you're 8 months into this, and you're seeing all your friends moving out of state, moving out of Chicago. They're moving back to their parents' houses. They're moving back to Colorado. They're moving back all over from wherever they came from. Do you really think for a minute that those people are going to go flying back into Chicago after they moved out to the suburbs or to another state? There's no way. I think that what we're looking at in these big cities is we're looking at a minimum of 7 years before these big cities return to some normalcy. 5 to 7 years. Well, I mean, the comment about the millennials, and I don't mean to be mean, but the millennials they've come in at a time of great prosperity, job expansion of the economy, expansion of the stock, a stock market that doesn't go down. Yeah, it does depend on the size of stimulus, but we'll see. But they've never been tested, these millennials. And I don't mean to be mean if anybody is a millennial. I'm just saying that they've never been tested. They haven't been in a war. They haven't been in the Middle East. They haven't been in Vietnam. They haven't been tested. They want to rent. They don't want to buy homes. So what do you really think when everybody gets this vaccine and people start showing back up in the offices that people are going to go flying back into these big cities? No way. It's going to be a long time. And for those hardy people that want to jump into the real estate market there and stick it out, you may have an opportunity to, but right now I think more than an investment opportunity in New York buying condominiums or real estate or whatever, you've got this, you're going to have to work off this influx of mega price properties that are, 3, 4, 5, 10, 15, 20 million that no one's going to buy. No one's going to buy those things. So, my thing is that this is not going anywhere. So to conclude this, here's where I'm at. I think the markets are okay right now. I think that the markets are going to continue to go up. I'm revising my end of the year call for the S&P to 2830. I was up at 2950 or 2900. I don't think it can go that far before the end of the year. But I do think that there's going to be an acceleration on the upside in the S&P as you go into the Santa Claus rally, you go into the end of the year stuff. I think the stuff is just going to take off. I'm thinking 3850. Well, I hope not 2850, but it could be 3850. But anyways, you guys, and then what I'm thinking is that we're going to have some type of correction in the first quarter, end of March, into that area, and then at my 2021 call for the S&P is S&P 3300, 3250, 3300, 32. No, wait, no. What am I saying? 42 to 4300 in the S&P. So we're going to go, we've got a couple more slides here. I don't know, Marlon, you're moving around.
Yeah.
I
stuck this slide in because you were upset I didn't.
Oh, okay. Well, I mean, historically, you guys, I think a lot of people know this. The best performing months for the Dow Jones is from November to April, or November to May. And then the worst performing months are from where is that? From November to April, from May to October are the worst performing. So, I mean, we're going into this period right now where I think historically the markets are going to remain firm going into the end of the year and the first part of the next year. So Marlon, slide 20. Okay, so yeah, so we're going to tie this up, you guys. And maybe Marlon, who shafted me today, will come in and talk a little bit about the MIM. I'm sure he'd like me to not mention this. But anyways, we look at one of the things that MrTopStep is we've really evolved as a company, as a forum, as a trading group. It is really a collective, and I've said this before. And I know that for a long time we charge a lot of money, and we're moving toward kind of straightening that out. The main room that we offer, I think, is $250 to $300 a month, or even more than that. For some people, yeah, $350, and that gives you all the products. But what we're offering here today is a 2-month deal for $99, and you'll get, this is a link, and Marlon will put the link in there. And then, can you go to slide 21, Marlon?
Yeah, I'm typing. Hang on.
Okay. Okay. So that's the link for the offer that we're making, and it's access to everything. It's access to the IM Pro trading room. It's access to the MIM trading room, Live Squawk audio news service, which I think is really a great service. I really do. The MIM 3 and the MIM 4, which Marlon just got done working, the Alpha Heat Seeker, and the premium opening print that I have written, believe it or not, for almost 30 years. I mean, I was in Dubai in 1996 doing Sheikh Mohammed's business, and we would be out shit rocked. And we go to the brokerage firm. The S&P would close at 1:30 in the morning, and I would be up writing this thing so that people in the United States that took the service would get it. I don't know how many of you have seen or read the opening print, the full edition of it, but I believe that there's you guys out there with your charts and your indicators and all the fancy stuff that I don't understand. And then there's me out here reading volume and reading the trend and reading daily patterns. And I believe that in our forum, and I've known this for a long time. I knew it from the trading floor at the S&P desk. We had a chat on the floor that had like 500 to 600 banks, prop firms. Everybody was in it. And what those guys were on that thing for was they wanted my field during the day, and they got it live. And if you want it live, you'll be able to get it in the forum. But if you want to read about what I'm thinking, you get it in the premium opening print. And even Marty said something to me today about it. Very, very seldom would he pay me a compliment, but he said, I gotta admit, you've really been hot on that opening print. So I don't want to say that. I'm not going to say it about my trading, but I'll say the opening print has been really good. Yeah, Steve, it's really, and the thing is, the deal is really, you're going to be, I hate to say this, geez, you don't know where you're going to be with COVID the way it is. You're going to be locked in the house. You're going to be more in front of your computer screens. And even if you're not a trader, just if you're just an investor and you want to be a little bit more connected to the flow, a little bit close to what's going on, I mean, it may be a good thing, going into the end of the year if you're not part of this, to get in there and say, hey, you know what I mean? I want to check this stuff out. And for that price, I don't think anybody can go wrong. So with that in mind, you guys, Anybody want to stick around and kind of chat a little bit? What do you guys want to do? Want to talk about price action? Want to talk about your trading? What do you want to talk about? Anybody in here?
Hello.
What is the alpha heat seeker?
Ah, good
How much?
question.
How much after? Oh, okay, here we go.
Here's the heat seeker in its alpha mode. This is why I didn't get any slides done today, Danny, because I was trying to get
Oh,
this
okay.
done
All right.
for the thing. And this is actually something that you and I talked about a little bit. And you're talking about having the circular day. So
Right.
the circle represents a particular day. This is the December 1st through the 7th for the SPY. And the way this works right now is each one of those little green bars wrapping around is a 5-minute window. And that 5-minute window looks forward, so it's forward looking. So basically what's this saying is on December 1st at 9:35, you could have bought SPY for 365, sold it at 9:50 for 365.95 and made 89 cents on the trade, right? So you have all these little 5-minute windows going all the way around for 1, 2, 3, 4, 5. How many days is that? 5 days. And you can start to pick up trends where the market you're looking for, like when the market hits lows, when the market goes highs, and those kinds of things.
And time.
So you can
and times of day, right?
Right, and times of day. So it's all slices of times and day. What I want to do, because this is kind of a micro thing, and this talk was a macro thing, is modify it so you can actually have days and weeks on the axes. So you can say if I hold it for longer, for a day or for a week. You can even do years and do months and things like that. So it's a way of slicing temporally, time-wise, across a section of a symbol, basically, a price action on a symbol. So I didn't quite get it done, but it's getting close. I think Apple, if I remember right, Apple looked pretty good here. Let me just try this, see if this actually works.
Oh, how much is it for? How much is it after 2 months, Marlon?
So what's the deal for the 2 months? Is it's after 2 months, it's $99 a month per month.
And no recurring. We're not recurring on that.
But the 2 month deal is not auto subscribed. So we'll contact you at the end of 2 months before it runs out and see if you want to join, because I don't want to have to do a bunch of refunds because people missed the auto renew.
And the other part about this, real quick, is that I think we're a little different, and I've always maintained this stance. If we don't bring you any value, if you join our forum and you're 2-3 weeks into it, and you don't find any value in it, we don't want your money. You know, I mean, if you let it go run a month and a half, and then call Marlon on a $90 deal, and you're 2 months into it, and say, "Hey, Marlon, I want my $90 back." I don't know what to say about that. But if in the first month, if you do it, or in the first 5 weeks you do it, well, there's a lot of stuff going on in the room. I mean, you really got to see it. I mean, what I was trying to say before I jumped into this thing is that there's a lot of equity option traders in there, like there was on the trading floor on our instant message on the floor. They want to be close to the guys with the futures. You know what I mean? They're equity options. They see the markets going down. They see me call for a late day rip. You know, I mean, not everybody's trading S&Ps. Not everybody's trading NASDAQs. Well, and I think, Romeo, there's no way that you. Here's the thing about the forum. Everybody gets to talk. There is no top dog. Just because I'm quote unquote MrTopStep, I'm not the top dog. It's a group of people all throwing in ideas, all throwing in levels, all communicating. You have a seriously awesome group in the chat room. Thanks, Martin.
Thank you, Martin.
But anyways, so we'll go back to this. So the heat seeker, Martin.
Okay, so yeah, on the question about training, you guys, I'm going to give you my phone number. When you join up, you get it in the welcome thing. Call me. I spend hours in the day with people, and we can work one-on-one through things. And education-wise, I'll tell you, the MIM for $99, even if you do it for 1 month, it is awesome, because you should not be trading You should not be trading the opening or the close because they're mechanical, they're not technical.
Yep.
You should not be trading them unless you know exactly what the mechanics are. Okay. Um, and you'll get that. You'll kind of get an understanding exactly how the opens and the closes work. And if you decide not to do them in, that's fine. But I'll sit down with you and spend a half hour, an hour with you, and go through that one on one because I find that I do better one on one.
Yeah, and the other thing is most people have, everybody in there is willing. There's not one person in there that you can't instant DM yourself if you've got a question. You want to hit somebody up direct away and ask a question to them, or you want to ask it into the forum. Everybody's there kind of help. There's maybe 6 or 8 guys that are posting most of it, but I always encourage people to join. Don't hesitate to ask questions. Geez, you didn't go this far to get to something and then say, hey, what was that? Something that stuck out that you saw that made, that you want to learn about, and then just let it go by. That doesn't make sense. So Marlon, one question. So, I like buying the falling knives in the morning, right?
Yes, you do.
So the heat seeker will give me a better average for times.
Yeah, I'm going to be able to. What I'm going to do is look for lows during a time period. So you'll see on the chart, you'll see them line up, and you'll say, "Oh, look, it usually happens between 10 and 10:15 or whatever it is happening on particular days."
Yeah, yeah,
And you'll
that's
be able to kind
great.
of group it together. That's great. I mean, I just looked at this this Apple here on the heat sinker. You can see almost all the price action on Apple is in the morning. Look how bright the greens and the reds are
Yeah,
in the morning, and that really sets
9:30,
the
9:40. Yeah, 9:30,
yeah.
9:45. I mean, that really kind of coincides with my own trading philosophy. I can't, you guys, I can't sit in there all day long. I mean, can I sit in front of my computer? Sure. But can I trade all day long? No. And one of the things that I believe is that the 2 best hours of the day is the open and the close, when the most volume is traded, first hour and the last hour. So I try to come in, if there's a good gap there, I want to buy the breaks. The market's up sharply. I love selling the opens, or the first rally above. Wait for the pullback and and look for that 9:30, or 10 o'clock, 10:30 low. So, anyways, you guys, I think do you guys want to stick around? Anybody want to chat a little bit? Any questions?
Yeah, the other thing I wanted to say too to people is Danny is a fantastic connector. He can connect you to almost anybody that you need. If you would need more information, he doesn't know everything, but he probably knows people who know everything or know something about some things. And I also can connect too. So I know a few people that are smarter than me. Well, I know a lot of people.
Well, I'm not smarter than you.
No, I don't know about that.
I got more common sense than you, though.
That's I don't know about that either.
Well, we'll have to test it. All right. Well, listen, you guys, listen. I don't have a problem talking about a little bit of some of the. I've got some rules let me go to another doc, and I haven't really shared these rules with anybody, because I don't. Oh, you mean you want to see my imbalance charts?
One other question was somebody asked how long is the room open for? It's open 24/7. We never really close it. And there are people there that trade all night.
Yeah, Martin
We try
Gerst and Trader Dave. Trader Dave was up till 3 in the morning or 4 in the morning the other day. There's people online. Yeah. But anyways, let me go to another document real quick, and I'm going to make this quick. I'm just going to lay it out here the way it is, guys. When I came from the trading floor, everything was done by hand signal. I did a lot of program trading, and I didn't turn that off, did I, Marlon?
No, I don't know what you've done.
All right. Well, that's what I'm always worried about what I'm doing. Let me get to the drive. So there's been
is this something you want to share with everybody?
um, I can. It's not in its greatest form, but hold on.
Because what I'll do is I'll stop sharing and then you just hit that new share down at the bottom.
Yeah, this is only part of it, and I've got another part of it, but this should be sufficient, kind of an explanation of my own view of how I buy and sell. So I'm in the Google Doc. How do I do it?
Hang on, I'm coming on your machine.
Okay.
Is this what you want to share here?
Yeah.
Where's your meeting? Hang on. Oh, it doesn't work. Why doesn't that work? Oh, so I get so confused. Okay, so where is your meeting at? Where's the screen that's not your screen that has the meeting? Is it on a different screen, Danny?
No. Yeah, I think I killed it. Oh boy.
Hang on. I can do this. It's right here. Zoom meeting.
Are you getting better at Zoom?
Yeah. Steve Hoven gave me a tip too. I thought it was actually set up was there's auto reminders that are supposed to go out. So that got screwed up. Oh, I don't know which. I can't do. I'm too confused. I'm trying to share. What am I trying to share, Danny? This one here?
Yeah. No, you just shared my chart, I think. Oh, sharing. Yeah, now you got it over on my other computer.
I don't know.
You're sharing your screen.
Oh, yeah, you got it now. So go to your document.
Yeah.
There.
And then hit share?
Yeah, no, it's all done. You're all done.
Okay. All right. Can't see anybody like chatting or anything. That part I can't see. If there's any questions, I can't see. Can people see it? Can you see it?
I see it.
All right.
Yes, people are saying yes. Martin says yes. They see you.
Okay. There, I want to be honest with you guys about this. I'm a skeptic about paying for a lot of charting tools and indicators and all this stuff. I guess the reason for that is that I'm not I'm probably not the best student. I don't know if I was never diagnosed with ADHD, but you want to give me a long drawn out explanation about something, I'm going to have to read it 4 or 5 times, and I'm going to have to try to work it into my own visuals, but that said, I'm not downgrading anybody's stuff that they use. I mean, one of the things that I learned was over the last, especially going into the credit crisis and after the credit crisis, a lot of the things that the Pitbull used to use that used to make him money didn't work anymore. And I'm telling you, they didn't, not only did they not work, they've not even got any semblance of working. And I think that's got something to do with the way these HFT and high frequency, algorithmic and high frequency programs are designed, is that they lock on to things that work. Martin probably could explain this a little bit more. They take things that you and I use, the retail use, and they code them into their bots. They know that there's 3, 4, 5 handle stops off of any low or high. There's another set of stops that are 8 to 10 handles off a high or low. And I've known about all this stuff for years, because really, when I used to place orders on the trading floor, we had ARB orders and we had paper orders, and the paper orders would come in, and those were orders that we would